So in another video, you talked about the three legs of the stool of private lending.
Right.
So what are those, and how can private lending help you if maybe you're a little short on one of them?
On one of the legs.
Yeah.
You know, I keep boiling it down. I really want to make this as simple as possible. And as you know, in order to have a seat, in order to, be able to sit down on anything in life, you got to have at least three legs. And in private lending, the first leg is collateral, the second leg is income, and then the third leg is credit. And a lot of times when you walk into an institutional lender, they are looking at all three of those legs. And if one's a little bit short, sometimes it gets awkward and they kind of kick you out. But let's take a minute and talk about the collateral. A lot of times we exist because there's something wrong with the collateral. It needs to be perfected. If it's a fix and flip property, or it's an REO or a bank-owned property, a lot of times the kitchen may be gone, there may be some doors gone, there may be some functional obsolescence. Sometimes people start a home, I know it's really common in Europe, they'll start a home and stop. Here, people don't understand that mindset where you start something and then you want to finish it up. So it could be the property. Sometimes it's just a land-home ratio where Fannie Mae and Freddie Mac wants the house to be worth 1/3. They want the improvements to be 1/3, 2/3 of the property and 1/3 of the land. And sometimes when it's opposite, you got a nice house, but you're sitting on a lot of land. That sometimes gets you bumped out. Sometimes it's just credit. A lot of people, we've gone through everything. This has just been brutal these last few years. So we've all been, kind of shaken and rattled in our cages, and you shake your head. But for whatever reason and whatever wisdom, the government and the institutions have said, look, if you have a short sale, or if you have a bankruptcy, or there's something going on, a foreclosure, we're going to keep you off the field. And that's very frustrating because you can buy a home, let's face it, a lot less than you could back in '05. And so I don't want people to feel if we've been bruised or battered. We've all been a little beaten up and bruised and battered. But hey, you know what? Private lending will allow you to kind of get back on the field, kind of get back in the game. The question is, what's the exit strategy? And same thing on the income. Sometimes if you're self-employed, you're in between jobs. Let's say you did get laid off during the Great Recession and now you're kind of coming back, but that job security is not there. So my goal in life is to find the right loan and find the right terms that allows us, what's the exit strategy? Because at the end of the day, you really don't want to hold on to a private loan that long. You want to kind of get in. It's really more of a bridge. And a lot of times we call them bridge loans. I want to get you from point A to point B, and then how do we fix you? How do we fix the situation? What do we need to do to make it work? And sometimes it's seasoning. Sometimes you can get a great deal on a home. I just did one with a friend that bought a duplex and he got a great price on it. And we funded the loan, and he's going to hold on to it for a year. And after a year, he'll be able to use the value of the property versus what he paid for it. And that's the beauty. That's when private lending just shines.
So what I'm hearing is, with private lending, you have a little bit more flexibility. You can look at someone's individual circumstances and the property that they're considering and come up with a comprehensive plan on how to get from point A to point B.
Exactly. And I feel a lot of the institutions now, especially, there are a lot of great ones. And I get a lot of referrals from a lot of great loan officers here in town, but their hands are tied for whatever reason. And they're so afraid to fund a loan and sell it in the secondary market that if an examiner, someone comes in and says, wow, you shouldn't have funded that loan, buy that loan back, that's their biggest fear as an institution. With a private lender, there's a lot more logic behind it. It's not rocket science. And what I love about it, there's not a lot of brain damage. Either it's going to work, it makes sense, or it doesn't make sense. And that's really what I love about private lending. It's just a make sense kind of business.
Can it be also kind of more about relationships? I mean, because you have that flexibility, it's more personal, isn't it?
It totally is. And when there's a camaraderie, when there's a real understanding, when there's a real true, bond between, when the tide comes in, all the boats go up, So I really like it. And if you have that mindset of that thinking, it's a win-win situation, or that makes private lending, awesome. And I think sometimes people forget about that. They just, so most of my clients, a lot of them are repeat. Some of them are referred to us from banks, institutions, credit unions. A lot of, type of institutional lendings they're here with me long enough until we can quote unquote fix them or fix the situation. And then the exit strategy is to give them right back, get right back into it. And that's kind of what we ultimately want to do.
You must feel pretty cool having a good business that helps people.
It's been a great ride, and some of us that have been in the business, it's just been brutal. I joke a lot when things got bad, it got very, very bad. And I joke about, even though the model fails, the equity is in the people. And there's been a lot of great people who, went through this great recession, went through what we had to go through. And now that that's over, a lot of them are gun shy, or a lot of them are, they're just like, wow, what do we do? But, we all got beat up. But even though the equity, even though the model failed, the equity's in us. Right now, I think the opportunity is phenomenal. There's a lot of improvements that need to happen. There's a lot of things that can happen. Unfortunately, from an institutional perspective, you're not going to see a lot of aggressiveness on their side. I really think we're moving more towards a Canadian model, where you see, the public lending side is going to get tighter and tighter and tighter, but the private lending side is opening up. You think about crowdsourcing, crowdfunding, 506Cs, where you start to see the accumulation of private investors get together and really do some really fun, interesting stuff. That's the exciting part of it. We know there's a real demand. It's like the chicken or the egg. We've got to get the product up. We know that there's end users for the product, but right now it's becoming very, very difficult to take, a piece of property that may be bruised or battered and then get it to a point where it is perfected. And so that's what's kind of nice about private lending. It's going to really fill that niche.
I don't know the answer to this, so that's why I'm asking it. If someone gets rejected by an institution, should they call you?
You know what? I always say it's worth a conversation. And I get a lot of referrals from a lot of institutions because I'm not in that business. I don't do FHA, VA, or conventionals. All I do is private lending. And I joke a lot about our clients, and if you call me, be prepared. I'm going to probably say, in private lending, in lending and private lending, there's no religion. Private lending, it's easy to measure. And I get left at the altar a lot. A lot of times we'll put together a file, we'll put together a great loan request, we'll get all the way to the end, and you know what, you may have an uncle or an aunt or a grandfather that says, hey, why should you pay that kind of loan? Well, I'll lend it to you. No problem. That's awesome. So, and I don't get upset. I think a lot of private lenders and a lot of brokers in that space, if the transaction doesn't work out, they get upset, they get bitter. Hey, that's life. That's why you're in it. If you can't take that part of the business, you probably should get out of it. You've probably been in it too long. But that's just the way life is. That's just the way it goes.
So it is back to that perspective.
It
people
is.
First.
And forgive me for my analogy, but I don't get butthurt. That's just part of life. Good. If you've got a better way to go for it. I just think life is a marathon. It's not a sprint. I've started, like I told you earlier, back in 1984. I love what I do. It's awesome. And I've got a friend my friend Alan, he's 92 years old. He's still doing transactions. We're still doing business together. And that's a great space to be in. It's, how many people get to really do what they want to do in life and love it, where you're 92 and you're still looking at deals. I love it. So he's my rock star. He's a great inspiration. So no matter the intensity and how many hours a week I'm going to work, I don't know, but I've made a lot of poor choices in life. Well, I'm going to be working a lot longer. I've got 4 kids and they all got to get through school, so I'm in it for the long haul. But I love when someone is that age, at 92 and still having fun. And I think that's what life's all about.